Hi folks, it's Chris here from Serene Education with the 4 majors analysis update for the 14th of February 2012. Just going to be looking at the Euro against US dollar to start with from our 4 major pairs this morning on our CTC strategy template. Just going to look at the daily time frame, give an outlook on what's been happening and what we could expect intraday. Pulling back from highs that we saw last week and coming unstuck at the top end over here. Quite clearly see that prices fell to move further than those highs. Indecision, a bit of a spinning top, not very convincing, and then we saw shorting taking place, and those very interesting, because a lot of people don't seem to think that Greece or the Greek bailout has really come with any true potential. So a lot of shorting has taken place. Yesterday, in particular, we saw pretty much buying through the early parts of throughout the European morning session yesterday, and then through the US session we saw price just pretty much falling over. And then on the Asian market this morning, going into European session, we've seen shorting to the downside. So not really a good setup as such. At the moment testing the 20 period moving average, but market sentiment coming off those highs and heading lower. And I think we're, if anything, if you look at in the retracement, apologies, wrong one. It's not a good start to the day. Caffeine hasn't kicked in yet. But if you look at the fib retracement levels, 23.6 has been breached. If we can see price closing lower than that today, then we should be looking out long term as still or potentially 38.2 down at the 1305 as our potential long term target. Okay, so 23.6, as you can see quite clearly, it bounced a couple of days ago. Price closed higher than that yesterday or last night, but as of then, price this morning has traded through that. If we get a bounce higher and a close higher, then we potentially could see a consolidation with further upside movement to occur. However, if we see price closing lower today, then we could see potentially price falling lower to 38.2, back down to this 50 period moving average, and then ultimately down to 50%, 61.8. So very interesting to see what happens in the coming days as we probably potentially see euro falling over. Okay, so intraday, just make a note of that figure there, 23.6, of where it is. And what have we got here? We got, I think it's 13156. So intraday, go to your 30-minute charts and stuff like that. 13156. Just type that in, apply it. You can see quite clearly now that price is trading on the underside of that. If price cannot break higher than that again this morning, we should see a continuation lower to the downside. CTC is in our favor. All the moving averages above price, and you can see be having lower swings into this. Price support here. Notice to be a lot through the Asian session, a lot of indecision, and then a decision candle this morning at 4 a.m. GMT. 6, as the European session opened, and we've seen price falling lower. Price has to remain below that in order to be considered still bearish. We don't want to see price moving higher, lower. You can see yesterday quite clearly a lot of buying sentiment early parts of the day, and then throughout the whole session, US session, we saw price falling to the downside. So as it stands now, downside trend in play. As long as price is not trading above 13,175, we shouldn't see a bounce to the upside. Hopefully we can see price consolidating around here with a breakout, pullback, and then a continuation lower to occur. Moving on to sterling. So look, same thing applied here to sterling as what happened in euro. Here we have the institution moving average in the way. Pretty much heading higher into that. A lot of support through a small part of that number of days where price fell to break lower and subsequently forging out a nice little support area here. And then we had an indecision, spinning top, then the decision candle, but the decision candle came straight into the underside of the institution moving average. And wasn't looking to take any trades here until we saw a trade above at least 1595 or 1600 in my case. However, the next following day, bearish engulfing at the institution moving average. If you look back what happened in October, November of last year, clear indicator we could see potentially price falling lower, and we had an indecision candle the day after that, and then 2 days ago we had the breakout. Yes, price rallied yesterday, however that tested the underside of that, confirming a resistance level now at a price support and price moved lower this morning. News out on, I think it was Moody, the credit agency, saying that it might very well downgrade 9 countries in total their AAA status, and Sterling or Great Britain is one of them. So it'll be very interesting the next couple of days. So if you look at the retracement figures for this particular pair, from the low that we saw recently, early Jan, to the highs we saw here in early Feb, you can quite clearly see that 23.6 has been breached at 15,750. So price stays below 17,500 intraday, then we should expect prices to continue lower, and 38.2 should be our next potential target. Break of the 20 period moving average, you can see it's quite, at the moment, are testing that, but the 38.2 fib for the remainder of the week could potentially be our next target here at 15,600-ish. Look at our intraday chart. You can see on the 50-minute how price has pulled back. We saw a nice breakout this morning in the Asian session, falling lower, and then going into the European session this morning. Sterling is rallying at the moment, back up to the 50% moving average, which will take us back to the institution, back to the price support on this breakout support. Are we going to see price finding resistance now at this area before we see another extension lower? That remains to be seen, but as I see now, you can see the institution moving average well above price, and while the 50 has been capped. CTC is in our favor, and the trend is lower. Let's see if price fails to materialize. You can see the trend here on the 50-minute chart is in play as we speak. Break of that trend and above that support, that price support line, would confirm we're potentially looking for a potential pullback. But it's the difference between seeing further shorting for the day, or are we going to see potential bounce higher? If it stays below the 15,700, then we should be looking for further shorting for the day, primarily for the European session. If it gets above 1573, then potentially we could be looking for further buying opportunities in price. So at a crossroads at the moment now. Wait for these candles to close, get a decisive move or break higher than 1573.50. Close higher there on a nice 30-minute candle will definitely indicate that we should be looking for further highs. But a failure here at this point at 1573.30, a nice bearish engulfing at that level there, around that level, will confirm that resistance is now key after price support and the breakout that we saw on the Asian session this morning, and we should see potentially further selling contracts being filled. Just looking at the 4-hour charts on Sterling, you can quite clearly see that we had a price support and resistance level through here. Very noticeably, an area of hesitation. That's what you're looking for. We're looking for very, very strong areas of hesitation as prices made a hesitative move and then made a decisive move after that. You can quite clearly see here a lot of resistance, hesitation in this area, and then a break above, and then a pullback with a nice little, almost a hammer, and then a bullish move to the upside, and then a pullback to the same area where price was resistance before, new support. Yes, yet again, a couple of days ago, same thing, support, a bounce higher. Notice, however, from these highs that we saw here, back on the 8th, we've seen lower swings since then, so price direction has been starting to show negative in sentiment in the movement, and sure enough, we saw the 20 and 50 crossover, and most importantly, our CTC starts going red, and for the first time, we're starting to see red because price has now broken through. On the 14th of this morning at 2 a.m. Japanese time, we saw the price break through with a lot of momentum. Yes, this morning, as we go into the European session, we are seeing a pullback. If we can stay below these areas here, then we should be looking for breakout, pullback, consolidation, with a continuation down to at least the 1560 or 1565 to the institution moving average is our first target long term. Okay, next up is US dollar Swiss franc. Let's have a look at this pair. Noticeably, I mentioned a couple of times before, 91.10, very strong support, or even higher than that, 91.2, but roughly 91.10, nice round figure here. You can see quite clearly prices fell to break lower than that. A number of days now, number of days now, clearly a week or so, where prices fell to break lower than that. And the longer it goes sideways, the more likely is we're going to potentially see a bounce. To cancel this bounce, or potential bounce that might occur at the support, we need to see a bearish engulfing to the downside. But as it stands at the moment now, CTC is red on our daily, trading below both the short-term moving averages and the institution moving average below price. However, we won't be looking for any shorting opportunities on this, primarily because price has not broken low with a lot of momentum. An indicator, we need a decision from the market, and we haven't got that yet. Very indecisive, pulling back this morning. after two spinning tops. Sorry, a spinning top and a doji, followed by a bullish engulfing. Price really pulled back, didn't really make any ground yesterday, and this morning Asian session we've seen price moving higher. We want to see price now trading above the prior resistance or ceiling level. You can quite clearly see how there happens to be one here. We want to see price trading above that in order to see potentially upside targets to a prior resistance support here, roughly the 9300 mark. Back to the 50 period moving average is our next potential target intraday. If we don't get that, then we could potentially see price trading into this resistance level, only for it to pull back, because we've seen it do it so many times over the past weeks or so. So as it stands, very indecisive, trading in a range. If you want to mark that range down, we're looking at 92.30 here intraday. So if we go to our smaller time frames, just put those in 92.30, I think it was. This one's not even on the chart. Let's have a look at the hourly. 92.30. Let's put that in. There we go. Prior highs. That's going to be a high we need to get above. Otherwise, we're just going to be trading straight into resistance. There's not much in here for you to actually make any viable profit. As we've already seen the move happen, you should have been in a lot earlier. So, got to wait for the pullback to occur. You might be able to see a shorting setup happening. You can see quite clearly we have a very bearish candle just recently on the 30-minute chart. Is that showing a bit of a sign of weakness before we see a revert to the downside? Let's see if it stumbles at this area here, but that looks like pretty much a candle that pretty got a lot of people into the trade. You can see clearly here trading at resistance level from a number of days ago. This one here spiking right up and then falling lower. A lot of indecision, a lot of wicks to the upside, a lot more selling momentum coming at the bottom. Will this fall over now? It remains to be seen. If this has remained higher, we need to see 9100 or 9200 being breached with a bullish engulfing to cancel all this negativity here before we see further extensions. Yes, the CTC is nice and blue. We've had a follow red, but just be aware we are trading at resistance. We want to see a nice, clear, decisive bullish up candle, and we don't want to be cancelled, faked into any trades. This is what happened here. Clearly on a 30-minute, you might be faked into this if you're looking at this trade earlier. Last pair of the day is US dollar Japanese yen, and I have to say it, and I don't say that often, is this one over here is the only one that's been trading with clear decision. Since that, it's non-farm payroll figures that came out just recently. Price has just got a huge fire under its backside, and we've seen really moving to those highs, and now tackling the institution moving average on our daily. Ideally, I'd like to see it trading at well above 78.50 in my eyes. Bar this intervention here, there's a bit of spike here, but ideally we can get above this resistance level here at 78.50 or 79. We'll be trading well above clean air, and then we could see price really moving higher. The Japanese, the Bank of Japan, buying bonds. Talking further about getting involved to try and sort out its inflation issues. So another thing, we've got to see price trading above this, and once we get above here, I can clearly see that we're going to start seeing more bullishness creeping in. Notice through the first part of this, chart, you can see a lot more red, and that indicates because we're trading a lot lower on the US dollar yen. However, you can start seeing a lot more blue coming through, and if this remains the way it is, we can get above the 78.50, 79, then we're going to see a lot more blue taking place, and we can see a definite change in market sentiment where there's more purchasing now than selling, and we should be looking for further highs. So ideally at the moment now, I'd rather give it a couple more days, get a break above 78.50, definitely confirming that price is moving higher, and then we could be looking for those highs for the future. That's it, guys. Hope you have a fantastic trading day today. Please ensure that you cross your T's and dot your I's when it comes to making sure that you have everything in your favor before taking a trade. Just be aware there is a lot of news out today, a hell of a lot of news out today over the next couple of days. In fact, we have a lot of news, and if you aren't in anything, then it might be well just to stand aside and let the markets just try and take care of all this news. Take it all in, spit out a final answer at the end of the day, and then we could look at things positive for the remainder of the week. But as I mentioned, we've had a lot of news. We had overnight for Japan. We've got a lot of news for Europe, and then even more news for the US market later this afternoon. So if you're not in anything, just please trade tentatively. And if you're not going to be trading, then just stand aside, let the markets do things, and then we'll pick it up during the latter part of this week. Until then, have a fantastic trading day and trade serenely.